Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick is here. He's not at his desk, as you can see. Here, let's take him off the screen. He's here, I promise. He'll be back in a second. But the show must go on without him. We got a lot to talk about today, guys. We got a lot going on, all right? We got NFT madness. We got Intel. We got GameStop. We got Viacom. A lot of individual things to discuss. There we go. Fix that camera, Joel. So that's what we'll do. I think we'll cover a lot of ticker time today because we actually, believe it or not, don't have a guest scheduled. Okay. That is okay. It just means more time for chat, more time for tickers. So that's the plan for the day there. Dennis is back at his desk. He's got the hair indicator working.
Fast market. He's in a fast market.
He combed his hair, sort of.
I literally just sat down like a second ago here. Oh, and I have Charles on here on the pro. We got Charles. Bye-bye, Charles.
Go, bring up those charts. Tell us how it's going.
We are trading in the green by 14 handles, 14 and a quarter, 39.14. We gave a look at yesterday's low, 90.50, got the 92 and a quarter. On that bounce, 39.19, folks. This is a yo-yo market between 3,900 pretty much and 39.20. Spent a little time above, a little time below, but man, my creaky old bones are telling me we got a big move coming. I just got to figure out when and which way. You have crude rebounding after getting shellacked. That's up $1.38 at 59.14. Gold in the green by 420 at 17.29.30. We have silver. That's trading in the green as well by 40.43 cents. And Bitcoin. That's trading in the green too, 1,900. It just won't lose that 55,000. So back up, the crypto's up, a lot of the market up. Triple D, how are you on this wacky Wednesday?
Just trying to survive. That's all we can do.
What about GameStop? Let's get it. Let's get the elephant out of the room.
Does GameStop even matter anymore? It's now NFTs. I mean, until GameStop announces an NFT deal, I don't think GameStop is even in the remote talked about nearly as much anymore. I think the GameStop story is over until if they came on the conference call and started talking NFTs, GameStop would be a $300 stock right now. No NFT mention, goes down. They should have been thinking, man. Got to talk NFTs.
How about the straddle? How about that straddle we talked about?
$60. It's not as bad. 24, so they're only losing $35 right now. So
the people that bought the straddle.
Yeah, oh yeah, and people who are buying straddles, it's a good way to lose money. I mean, these straddles rarely work out when you're buying the straddle, buying the call, and buying the put. It rarely works out.
I got our buddy Jim Tassoni. Used even though we don't give trading recommendations, he sold that straddle.
Did he?
Yeah.
On our talk yesterday?
Yeah.
Jim, good job, buddy.
Yeah.
I looked at it. The reason I don't do, my horror Apple story, and I've been spooked on it ever since, but it's probably cost me a lot of money in a lot of different ways. The opportunity cost of not rating all these other straddles that would have been bank and coin. So nice job, Jim.
Yeah, they'll zap. Those calls will be like Zappo, and the puts will probably have a little premium. But
there'll be a little bit still there.
But they'll never move as much as as when you're as much as you want them to move. But anyways, down $25. I don't know what the straddle was from the close from yesterday. We looked at the 195, but what do they say? I mean, let's cover it. Let's get it out of the way. I see a pre-market low 150. Do we even want to talk about the report, or we're not going to talk about it?
What did they say? They didn't really say much, Joel. What they say can be summarized in basically 2 seconds. They didn't take questions on the earnings call. The earnings call, we live streamed it on YouTube. The earnings call lasted about 22 minutes. And then it was over. and that was it. It was a
Why?
statement. It was a statement from the CEO that you could have gotten from the press release, and bada bing, bada boom, you're done. They didn't even mention, and I caught this later, but I guess in the filing, they said they may do an offering of some kind, but they didn't mention that on the call unless I missed it. Basically, they just talked about the Q4 and about last year's numbers, and that's it. And they said, we may do something with regards to our assets overseas, like we might sell them. I don't know. We're kind of thinking about it. Maybe. Who knows? But that's pretty much it. The call was over in 22 minutes, and they said absolutely nothing about anything forward.
What about Ryan Cohn? Did he say anything?
No,
about
no one. There was one person on the call. It was the CEO, and that was it. And then he left, and it was over.
Why is the company so silent? Is it just because they know that their stock price is just stupid? And they're like, they don't know how to deal with it, like that they realize that the markets are completely broken, and they're the prime example of it. Is that what Is that why they're silent? I mean, that's a good reason to be silent. Why do you think they're so silent?
And this is the thing, right? If they're not gonna talk, then all we can do is speculate. That's all we can do because we don't know. Because no one knows what they're thinking or what's in their head. We can't tell, and they won't tell us. So we kind of have no choice but to speculate. You know what I mean? And try to guess what's going on over there. I don't know, Dennis. I had 3 questions going into yesterday's call. My 3 questions were: what do you do? How is the e-commerce thing going for you? How's that transition going? And e-commerce sales were up, but that was true for the whole industry last year. So it's not unique to GameStop. Are you in contact with any regulatory agencies about what's the craziness with your stock? And what was my 3rd question? Regulatory agencies, e-commerce, and I forget. The point is they didn't really answer anything. And nothing got answered. It just more questions. And they talked about the quarter. They talked about the year, the numbers that you could have gotten from the filing, from the press release. And that's pretty much that was the end.
I think they got a good lawyer. Probably.
That's
I think you're right too, Joel. And Mitch is saying the same thing. I think they're silent just because they don't even know how to deal with this, and they just want to be silent because they don't want to be, if they're selling some stock or if they're doing anything, they don't want to say anything that could possibly manipulate the price of the stock.
Yeah.
So because we know everything, it's the GameStop. If they, it was a joke when I mention NFTs. That was a joke. But I mean, imagine if they did something like that, then all of a sudden, the company's going to be under attack for what's been happening. So, I mean. I think you're right. I think they have a good lawyer, and the lawyer says just say the basics, and that's it. Because there's too much. Yeah. There's too many regulators around you right now. There's too much everything around GameStop right now.
Probably.
So they got to be silent. It makes sense.
Why don't I just give the numbers just for a second, just if for some reason you didn't see them by now and you care about this stuff. Their EPS missed by a penny, $1.34 versus $1.35. Their sales also barely missed the estimate, $2.12 billion versus $2.21 billion. Q4 comps up 6.5%. E-commerce sales for the quarter up 175%. Again, that's not unique to GameStop. That's the whole industry seeing e-commerce growth there. They are still suspending guidance, blaming the pandemic. That's, again, not unique to GameStop. And there's one more thing that they said. I'm trying to find it here. No, I already mentioned the Europe thing and the potential offering. But this was interesting. Apparently, the conference call got maxed out. Like, the room was full.
And they couldn't even get in.
So we were already in there. I was in there from like 2 o'clock onward.
Yeah.
But if you weren't in there before, you got locked out.
Unbelievable.
It's interesting. And then something else I noticed last night is Roaring Kitty. This guy knows how to time his stuff. He occasionally will post to Reddit, like in his position update. He does it like not on a regular basis. It's based whenever he feels like it. And he hadn't posted for a couple weeks, I don't think. But he posted last night. And every time he posts, it's just reinforcing.
What did he say? He bought more GameStop?
Well, no, it's the update is that he hasn't sold. That's the update.
So he did that before the report?
No. It was after the report.
He's trying to pop it back up.
It was after the report.
He's trying his hardest to get the stock price back up with those actions.
So he hasn't sold any. I hate to harp on this, but he hasn't sold any.
No. I believe he has. I believe he has.
Yeah.
I believe he has sold.
But you're coming out there, the thing's going down, and then you post, "Oh yeah, I haven't sold any stock." I mean, that's talking to me like you're trying to talk the stock back up. So, anyways, that's this whole GME circus show has just left such a bitter taste in my mouth for the markets altogether. And when a stock, I've tweeted this out before, when a stock is this disconnected from fundamental reality, price can go anywhere. It can do whatever it wants. It is meaningless. You got technicals. So that's why we're going to use Joel here in a second, because we've got our technical analyst, Joel, here that does pretty good with the numbers. But from a fundamental basis, anything can happen here. The story, like I said, if a headline came out or somebody started a headline, there's so much talk on this, so much social media around this. It's driven by the story right now too. I'm just out. I don't even want to trade something like this or really even talk about it. It's honestly just sad for the markets that we look at something like this and a stock that's obviously not worth nearly as it is can stay up this long. Like, you always see price dislocations in the short term, but we've been talking about this for months now, and the price is significantly above reality. It just makes you think that everything is just a big house of cards. And maybe it is. The entire market is probably just a big house of cards. And that's why price, goes, oh, what's happening to this stock? I mean, there is value, and we can get to Intel in a second. I mean, some of the value stocks, why they've come back, because some of that house of cards has actually started falling, in these crazy growth names. You've seen some of them come down significantly, and you've seen the value trade really catch up because, all of a sudden people are like, oh, maybe valuation does matter. But I mean, this GameStop story is just, we've been talking about it so long. It's just almost exhausting to keep talking about it.
Yeah, it's like dry ships. Let's go. I'll put a bow on this. Pre-market low 150. You also have a daily low at 150. So that that is an area of support as we speak right now. We did the big bounce through the 50%. So if you sold at 260, you're probably regretting it when it went to 360. But now, let's see a half of this move from it's a 300 point move, 150. That puts you up like 190, 200. So there's going to be more overhead. You caught people here. You got this other rally. You got people caught here again. So boom, until this thing gets back over 195, 200, I think it just drifts lower. All right. Done with GameStop. Well, what do you want to cover next?
Let me put a bow on this just to add just a couple of analysts chiming in this morning. Michael Pachter from Wedbush is giving it a price target of $29. So even though he acknowledges, let me just read you from the note if I can for a second. This is the very beginning of the Wedbush note this morning. GameStop is well positioned to be a primary beneficiary of the new console launches. We remain quite optimistic that it will return to profitability by this year. However, goes on to say the price is so disconnected from reality that we have no choice but to maintain or underperform. Give it a price target at 29. That's Wedbush. Jeffries is out this morning, and they're going the opposite way. They're just playing price catch up here, so they're raising their price target to from 15 to 175. That's what Jeffries did this morning, just catching up on the price. So chasing price there. There's a couple analysts out on GameStop this morning. There are more. We don't need to go through all of them. Yeah. And with that, we can move on.
I was going to say, for those who don't follow Michael Pachter, he's been bullish GameStop. He was actually one of the bulls. He was one of those that when it was down at $3-4 was saying this is a company that eventually is going to turn it around.
Yeah.
He's saying it's disconnected from reality.
Oh, yeah.
It's not just my opinion, saying, oh, it's disconnected from reality. There's no fundamental justification for the price, but it doesn't matter. And I'm not going to say this is going back to 20, which it normally should in normal markets. I'm not going to say it's going to 300. It can do whatever the hell it wants. Price disconnected from reality can do whatever it wants. Tesla to a certain extent is the same thing. It's carried by story, not fundamentals. I mean, Tesla stock trading up here this morning because Elon Musk said, oh yeah, you can buy Tesla with Bitcoin. It's all
not trading up that much.
That's it.
It's not.
It's all just story, Like what carried Tesla 2 days ago? Kathy Wood coming out with a ridiculous $3,000 price target. So it's not fundamentals. It's like opinion that carries these stocks. It's people's opinions. And this is maybe, it's not just Tesla. It's the whole markets. It's all just, people giving their opinions on everything. I mean, we give our opinions on stocks too. But, like the Fed, and, the Trump, and the Trump tweets back in the day. I mean, everybody just talking and trying to push price around, and it's ridiculous. It's become, social media is really, to a certain extent, it's helped the markets, but to the other extent, it's harmed the markets because there's just so many people talking their book all the time. talking about, like, I don't like to talk stocks I own at all anymore, for the simple reason is that I'm not in this game to try to come on here and pump some stock that I've just bought. I'm in this game because I'm trying to educate people. I'm trading because I'm trying to make money, but I try to keep my trading separate almost from my commentary here, because I'm trying to come in here and, so we're trying to find good setups for you. We're trying to, trade stuff.
Good risk rewards.
Yeah, we're looking at it from a whole different scenario. It's why, people want us to talk small caps all the time. We don't want to talk small caps on this show because I don't want to say something and then the stock goes up on it. Like, it's just bullshit. So, and people who are out there just pumping their books all the time and trying to get the stocks to go higher, that's manipulative. It's manipulative action. And if there's people out there that are just pumping, like that California trader that was doing it on Twitter, the regulators are going to start hammering down on shit like this. And you know what? They should. Because it's not fair that, people get this huge following, on Twitter, and then they're just going to buy stocks, and then they're going to pump them out there and then sell into those pumps. Those are called pump and dumps. And you're seeing a bazillion of them. They're of smaller scale, but some of them are larger scale throughout social media right now. And you know what? Regulators are going to clamp down on this, and they should. Just my thoughts.
And the difference between someone on Twitter and Jim Cramer who moves stocks is that Cramer can move a stock, but he's not selling.
He's not trading it.
Right, he's not trading it. That's the difference.
He's not trading it at all. So he's not even allowed to own stocks. So, and Jim Cramer, and, this is the kind of market, it's interesting enough, the stocks that are going on Cramer lately, because people have been burned and just following blind opinions for the last little bit. You're starting to see some of these stocks that get featured on Cramer not go up and actually go down. Like the stock he had on last night, AQB, got a little lift during the regular session because it was going to be on Jim, but not like it was a month ago. And then it went down during the regular session. No. So, people are starting to get like, hey, this isn't working. The stock goes on Cramer. Jim Cramer says it's going up, and it's not going up. What's going on? It always goes up when Jim Cramer says it's going up. So, and it's nothing against Cramer. He's just very influential. He's like, he's so widely followed. He says a company and, I like want you to buy us right now, and the stock goes higher. But the Cramer pops are even getting muted to a certain extent because you know what? People are getting burned. People are getting burned off these story stocks. So I don't know.
The other thing I would say though, Dennis, though, I think maybe you might need to consider the fact that the ground is changing a little bit. And that we've entered this era of influencers in the market.
That's called illegal. That's like it's right going down to your FINRA. Go start looking at stuff, though, Spencer. I mean, you can't just come in here and start buying stocks and then and like I'm not saying on the show, but I'm saying on Twitter. On our show, we try not to talk that stuff. We disclose it because I don't want any of that crap. We're not about that. We're all about education on this 8 to 9 show. We are all about education. We've always been about education, teaching people to trade it. I don't like it. We give the odd trading idea. We have people come on and give trading ideas. But what we're trying to do on this 8 to 9 show is teach people to fish, not give people fish. And there's a lot of other stuff that's going on Twitter and everywhere where people are just coming on and they're just, I guarantee you there's accounts out there, which we saw somebody get charged in California, where they're buying stocks up and then they're trying to build a following and then they're trying to pump them out there and they're trying to get their stock to go higher so they can dump it and make money. Those are classic textbook pump and dumps. Social media has created so many mini pump and dumps. They're just everywhere. So just listeners, be careful with who you're blindly following on all this stuff. I know, you can make some money on these things if you're early enough, and they still, there's some people that made some money on a lot of these different pump and dump accounts. I'm not going to even name any of them because I don't even want to give any of them credibility. But you've just got to be careful, if that you're not the last person to buy, because a lot of these stories that you're hearing on Twitter are just stories, and there's nothing really there.
I wish I could find.
Thanks for the tips, folks.
Yeah,
we appreciate that.
Yeah, thank you for your transparency and education. Triple D, boom, boom. I would say line in the sand here for Tesla is that low that you had a few days ago, 625. You had the bounce off to 540. We knew that was a monthly level. I just had a stinking feeling 700 was going to be a stickler. It has. And now, folks, I mean, you have half of this move here. You're giving it back. You lose that low at 625. I'm thinking you're back down at 640. And I don't want to scare anybody, but a true technician, which I'm not, you had a 450-point move. If this is a similar move from 700 minus 450, you're going down to 350. So, not saying
it's
that.
Tough. I mean, you got so many people who are along this to keep defending the stock. I mean, you got Kathy that comes out with their $3,000 price target, and the stock pops 40 points off of that.
But
so, I mean, I don't know. Like, it's disconnected from reality as well. We can keep saying, "Oh, it's a technology company," but it's really a car company. There's SpaceX. You're not buying Elon Musk when you buy Tesla. These other companies, there's other stuff going on as well. So, it's disconnected from reality too, but it's been disconnected so long. It's such a story stock. It's not fundamentals that carry Tesla. It is story. So, if the story gets hot, what if they decide? What if Musk comes out tomorrow? And this is not out of the realm of possibility because he's so outspoken. He talks doggy coin. He talks crypto. What if he says, "Oh, Tesla's going to get into NFTs"? What if he said that? What would the stock do, Spencer? Because then this can be a segue into the craziness of the NFT market right now.
What's going on? Should we talk these?
What if Musk said that Tesla is somehow going to be involved in NFTs? What if he said that? Then what do you think the stock would do?
Then the first thing would happen.
The algos would be all over it.
Is the basket of 20 or 30 quote unquote NFT stocks would go to the moon.
Yeah.
And regardless of whether they have anything to do, which they probably won't have anything to do with any hypothetical Tesla NFT, right? But if Elon Musk said, "Hey, we're doing NFTs," then all these TKATs, HOFVs, all of them would go up. All of them. Tesla would go up too, but the smaller ones would go up more.
Yeah.
So I don't know, and maybe that's a good segue into the
it is
last night that Chris Kachi had the exclusive on. Hall of Fame Resorts HOFV has partnered with Dolphin Entertainment DLPN to basically begin offering sports-focused non-fungible tokens, and sell them. And so that was the news. That was out. We had the exclusive it was out at 4:48 p.m. Eastern time.
Let's talk the DLPN for a second, because I don't know if this was on anybody's radar 2 days ago as an NFT play. You can just see. I wasn't on our list. You remember you had that list going, and I hadn't seen that. And I actually went back on Twitter just looking to see if anybody was talking about this as an NFT play. Maybe there was somebody, but there wasn't a lot of people talking about this as an NFT play. And all of a sudden, it comes out yesterday morning. I tweeted out with that NFT headline there, and it blasts off, and it continues. And now it's continuing here again because the algos. And Mitch, you were saying it too. I mean, you see these NFT headlines, the algos are all over it. There are like a dozen algorithmic traders that are just flocking to any NFT headline. It's the same thing it was with blockchain. NFT is the new blockchain. Remember 2 years ago, something comes out with a blockchain. Long Island Iced Tea changed the name to long blockchain.
No, that was the top.
And that was, the stock just blast off 300% that day. Kodak even got involved. They were going to go blockchain.
Yep.
So same thing here. You get a stock, it mentions anything to do with NFT, it blasts off. Are these companies real? Are these companies going to change the whole world? Is the NFT market for real? I think the NFT stuff is here to stay. Like I say, it's stupid all the time. There's a certain market for it. I kind of get it. Like I was talking about it yesterday. I get it. You own it. You want to own the first tweet ever. It's cool. I say I own the first tweet ever. I mean, we've gotten to a ridiculous level, though. Somebody just created a digital house in Toronto, and they sold it for $600,000. I don't know if you can show this. I tweeted it out if you want to show. But somebody literally created a digital house here and sold the house for $600,000. And I joked like a week ago, I was like, when the digital houses start becoming more worth than the houses, that's probably getting close to a top. Well, you got, this house is probably, a really nice house, I'm sure. But it's digital.
What's the interest rate on that mortgage? I wonder.
You can't, yeah.
I know, it's gotten to a ridiculous level. So
do you have to
get it, the scarcity. You want to be own the first tweet ever. You own this Beeple piece of art. I kind of get it to a certain extent, but the NFT buzz right now is exactly how we've seen the crypto buzz, the blockchain.
Do you have to mow the grass at a digital house or shovel the driveway?
It's like,
maybe that's the advantage, Joel.
It's just
like
low
Sims,
maintenance. Joel. It's just like Sims. You had to do it. You got to maintain it just like
Sims. Oh man, my girls played that a long time ago. Oh man. All right. Do we want to talk about these stocks?
There's no way to talk about them technically because they just all I don't think there is. Can you talk about DLPN technically? I mean, Dolphin Entertainment.
I
This
mean,
is the new
I
one from
can.
yesterday morning, and it continues to blast off. You've seen blast offs in this stock before. It has been prone to it. Back in May of 2016, the stock went from $1 to $50. I don't know what happened back then, but you can see it on the chart. So it has been prone to these blast offs before, but this is algorithmic driven by the NFT headline, and it's still going. So where are the party stops? Who knows? These things can go anywhere. TKAT, the party was going for 4 or 5 days. Yesterday it looks like it cooled off. Yesterday it looks like kind of maybe, topped out with the 74.11, but then they turn around and start catching bids and the things go again. So nobody really knows where these things top out. You just know when the dust settles, usually they end ugly. But right now, a lot of people doing pretty well if you're long DLPN.
Yeah, I look at this, and just from a technical perspective, I just look at that high. Like they took it up over 35, 38. So if I was trading this, I'd be like, man, I want this to get to 38. I want to see what happens. I would, if I had a long position, I'd be scaling out between 30 and 30, 31, 32, 33, 34, 35, all the way up and see if I get taken. If it goes up to that, I'd be happy with that. If I took this home long and, just on the close, I had a hunch, I see it traded 35, my first instinct would be, or 38. I'd be like, oh boy, I'd love to sell 38 today. But that's just the way I would do that for all these. I would look at the pre-market highs, see if you get continuation. I won't go through them all individually, but it hit that, it pulled back, $8-9. So that's what I'd be. You got to sell them on the way up. I mean, that's just like the easiest thing to say, but the hardest thing to do.
It
right?
is because, and sometimes you sell them too early too. You could say, oh well, TKAT, I could have sold on the way up at from $2 to $10, a pretty good gain. Now it's 53, and you're like, why did I do that? It's really tough to know how nuts they're going to get. I mean,
it's actually 44 right now, but
54 closed, 44 traded. I mean, these things are, they're crazy. The algos are all over them. You've got some retail in there as well, but retail, sparks it up, starts the fire, maybe on social media or maybe anywhere, or maybe it's a press. Sometimes the company doing it just on DLPN, just a press release, random. It's like, oh, this is an NFT play. Algos grab it. Retail starts grabbing, they start talking about it on major media, and boom, you've got yourself, a bubble coming. So
I just, you guys have noticed, like the SPAC talk. I haven't invested in one SPAC. I haven't.
The SPACs
they were good, but you had a system and you followed the system, and then the system stopped working. So you stopped trading it, and you're very nimble. You're at your computer all the time. You're looking at the news. You're seeing the price reactions on stuff. So, I don't have the time to devote to watching something like that. And I don't want to, because I don't know my risk reward. I don't need to wake up. I mean, you get your own disasters in your portfolio without going out to have to look at them and find them. But like you said, and we've said this 1,000 times before, if you are good at trading these crazy stocks and you're making good money, they keep doing it, okay? If you get on a bad streak, cut back your size. Take some of the money if you're making good money on this, take it, put it aside, and put it in some stable investments. But let's talk about some real stocks.
Intel, let's go. And this is what I do believe the market eventually, if we're not already there, just to segue into this, I want to segue into this, is valuation in the long run does matter. And we are seeing, the one thing good we are seeing about this market, and maybe this is the good thing out of GameStop, like I said before, because Reddit is about value over there. They're not about these crazy, a few growth names in there, but they're about value too. People trying to find the value. And you know what? Value investing is cool again right now. And Intel, I mean, it's had a hell of a run. I'm not saying go buy Intel at this price, but I mean, you look back when it was $45 or $50, I played it a couple times down there. I mean, the P was bloody 8, 9. I mean, on a stock that's creating chips. Do you think chips are going away? Do you think Intel's going away? I mean, and now everybody's like, oh, Intel, it's all about Intel. So it's funny how this market has turned so much off of growth and into value. I don't know how long that lasts, but Intel is the new AMD right now. Like where AMD was like, oh yeah, Intel's old. Nobody buys Intel. Intel's garbage. That's why it trades with a P of 9. And AMD trades with a P of 100. Well, what's happened now in the last 3 months since we've come to value investing AMD straight down, Intel straight up. And you know what? Maybe that gap isn't as crazy as you think. That gap's closing fast, and this
That
Intel
spread was
catch up.
huge. That spread was huge between those two.
It went from like 40. Yeah, they were the same price always. They were like $40. AMD went to almost 100, and Intel, went up a couple times. They couldn't get it. Now, all of a sudden, look, and AMD is a $78 stock, and Intel's a $66 stock.
They're going to par. They're going to par.
They could. They
will.
They should. Intel is a real company with, now that AMD is not a real company, but the valuations were always very ridiculous on AMD's side, and not ridiculous on Intel's side. That's all of a sudden starting to matter. So we've seen it with Tesla and GM and Ford too. Really, this has been a value investing market for the last 3 months. So I guess I shouldn't be complaining here. It's the kind of market that's probably I've been doing very well in on my long-term stuff because I'm all value. So.
And there's pain. And, one thing you got to keep an eye on with these relationships is like they turn, and they once they have a major turn, they usually don't reverse. That was because I remember I was talking to you a while ago about shorting AMD and buying Intel, right? And you're like, man, that's the wrong trade right now. AMD's going up, Intel's going down, and eventually it turned. So that's that would be a risky spread for a while, but when it turned, and it's moving in your favor. Let's go over the Intel news, and then we'll do a little bit of the price action.
Yeah. So Patrick Gelsinger has been the CEO of Intel now for like 2 months, and he is moving quickly.
He's kicking butt.
This is what happens when you bring on an executive who was previously a CEO at another successful competitor, right? He was at VMware. He knows what he's doing, right? So basically, yesterday was a great day for Intel, great day for America, I would say, because Intel is basically doubling down on chip production, specifically in the U.S. They're investing. They're going to build 2 factories in Arizona. They're going to invest $20 billion in that. They gave some updated guidance as a result. They said basically we're gonna double down on chip manufacturing. We're gonna be the manufacturers. We're not gonna try to juice our stock price with buybacks or dividends. Or we're gonna make stuff. That's what we do. We're gonna make chips. And they gave, like I said, a whole bunch of numbers. As a result of that, they announced a partnership with IBM, a research partnership. And they're going to support other companies, and they're going to be a supplier, and that's what people want to see. They want to see them make stuff, and that's what they said they're going to do.
A couple things. We got to dig up Colby Howard. You know who Colby Howard is?
Yeah.
We had him a guest on this show
when
they did the CEO change.
Yeah, it was that day, I think.
It was that gap up day. We made a bet that you ended up winning, because I thought it would come back down to fill the gap before it went up. And you got lucky because they released the earnings that day, like before the bell, and you went up and won the bet that it came down and filled the gap. I like it. I owned it, and I don't know if it's going to 100. I don't know if it's going to 120, but I put it in extra size position in the super extra long-term portfolio. And I'm not touching it. I'm not looking at it. I just think things have turned.
Good for you.
New CEO. And, my kids are going to have some what's inside dad's portfolio. Intel is what they're going to see when they get it someday. But, price action hit 68.50. That's a little bit overdone. Backed off $3 since then. Maybe let it come down over the next couple of days. That's a big move. I don't think we're going back to 68.50 today. And what's been the recent high? The recent high has been 69.29. So you're going to have some work to do to get through that.
All in all, like a great day for Intel. It's not the chart shows that, but this is what you wanted to hear, right? Like you don't want to hear a company like go on there. I forget what company it was, but it was like a couple quarters ago in the earnings call. They just talked. It was some chip company. I don't remember what, and they just talked financials the whole time. They didn't talk about product at all. You want to see a tech company, talk about their product. Talk about tech. Talk about making tech. It's what they do, right? So, they gave some numbers, but the numbers were almost incidental, right? It's really about, hey, we're still here. Remember us. We're Intel. We make stuff. We make chips.
It's 75.83. That's the all-time high. And then Triple D, another thing that, and I'm going to give you partial credit on this because you put this bug in my ear a while ago. Mobileye. They bought that Mobileye.
I think that's a good player for them too.
Yeah.
I love Intel. I've been long Intel, but then I sold it when it
Trading
went from,
range.
well, I kept playing the range. I bought it at 46, sold it at 55 or 60 or somewhere in there. I did it again. I bought it like 45 or 46, and I sold it at 55 or 60. I was hoping it was going to continue to do that. I was going to continue to do it. Well, it's left without me now. It's like 6 or 7 points higher than I sold. I think I sold 58 or 59 the last time, and it's left without me. I hope it eventually comes back down, but it's been a great play down there, 45 to 50. But I think eventually Intel's $100 stock again.
Actually, I think it was Intel. I think it was an Intel call. Their last CEO, and I think it was last summer or last fall. They didn't talk about product at all. They just talked numbers, and that's not what you want to hear. You want to hear about the product. So anyway, but
just
the building
today,
yeah.
Spencer. I mean, is now the time to come in and buy Intel? I mean, it's up 23. It's up 50% in 3 months. It's Intel. Yeah. So, I mean, even though I'm bullish it, and even though I think it eventually could get back to $100, I'm not chasing it here. I would love it to come back to the mid 50s, and I'd reload. So again, buying when there's a little more blood in the streets, as opposed to buying it when it's up $2-3. So could it rip to 70 today? Yeah, it could, but I don't think it's gonna. It's still a big, thick stock, and it's still a value stock, and they typically don't just start ripping 5-10 points. So
this is interesting. So Joel,
I don't think you have to chase it.
I don't remember if Joel brought this up, but on the daily chart, that gap, and that was from when they announced a new CEO.
Yeah.
So what it do? It popped, and then it came right back, and it filled the damn gap.
It did to the T.
So
to the penny.
I should have been buying that.
Yeah,
Phil, because I sold it on the CEO pop.
That was a gift. I mean, that high on that day, 53.85. The low on this day, 53.30. I mean, and then you didn't even look back on that one. You could card that up, and it was a winner. No heat on that one. But anyways, do we want to look and see what AMD is doing off this news?
I mean, this has ramifications for the entire
big time.
Yeah, so we probably want to go through the usual stuff.
Taiwan is the direct hit because with the chip manufacturing aspect of it, TSM was down significantly. It's bounced back off the lows. AMD was getting hit, obviously competitive, but they bounced back. Xilinx was getting hit last night on this. It's bounced back. So you got KLA 10 core, which is ripping higher on it, or it was KLA. I think KLAC was ripping higher on it. So, I mean, there is ramifications all through the chips on this.
I'll tell you right now. I mean, this is it. This chart is not as clear. I mean, because you've already broken this support here. You had multiple lows in TSM at 113, 113 and a half. So you broke that. But hey, let's just go a little bit longer term, and you tell me. If AMD breaches 74, where is it going? Where is it going if it takes out 74? I don't want to say 50, but you have been holding that level since August of 2020. And now if for long term, this is not recommendation, not trading advice. I just under 74, and how do you classify it? It goes to 73.60, and then closes at 75. But once that 74 turns into resistance instead of support, this thing's going to have a whole heck of a lot of trouble here because
it had that huge run from 55
to
75. So you're seeing all the air below there. So it absolutely is a critical level for it to hold. I agree with you on that.
And also people are got to think there's a lot of people that are long above 75, that are like, oh, still's got some profits. There's people that bought it in 90, but there's all these people down here, that are, hey, I bought this at 30. I'm not selling it until 120. They'll hit a bid. This thing's open, has bad news. It opens up down $5. Wow, these institutions will be out. They'll just, they have it from. Everyone has a different cost basis. So if you think this is going to just bounce off 74, it's going to have a very, very high. The news flow is turned, and it's going to have a hard time getting back up to 100. That's it.
There's a lot of people caught in this thing now.
Yep.
So you're right. It's easy sailing when there's clear skies ahead. That's why we love buying stocks making new all-time highs. But this has now got so much overhead supply from 80 to 85 to 90. Bag holder central here really for the last year. I mean, you can look at AMD that's been building, the bag holder area for the last year. So you're absolutely right, Joel. It's going to be tough for AMD to just start ripping higher to go 80, 85, 90. It's going to be tough. path of least resistance is probably lower.
You said it was going to hit 100, Dennis, and it only hit
Never did.
99.23.
99.23. I thought I was going to hit 100. I had what did I have? I had the spread. I got out of the spread. I was long the stock too at one time, and I sold out.
You were
got out of
wrong.
the spread. It never got to. I was wrong. It never got to 100. I thought it was going to get to 100. 99.23. I missed by 77 cents. Whatever the math is.
All right.
Do we have a guest?
No guest today.
Well, what happened?
What happened?
I'm wondering why.
No guest today. But I want to move on. It means we can cover more stuff from the chat.
Okay, sure.
We had someone ask yesterday afternoon. He's asked a couple of days now. He's asking about AVEO. He's like, they did an offering. I'm out. I want to get back in, but I don't want to look at AVEO. I want to look at Viacom.
Okay? I'm kidding. This is my worst trade of the year that I didn't do.
So the advice that we gave on AVEO was basically just wait. They've announced an offering, but they haven't announced the price. So don't do anything until they announce the price.
Never.
And why? Why? Because Viacom is why. Because Viacom is why. Darn
it.
Look at this Viacom, okay? So they announced the offering, was it 2 days ago? I don't even remember anymore.
Yeah.
2 days ago. They priced it last night at 80, the Class B, 20 million share offering, Class B shares, $85.
I'm going to tell you the easiest short is to sell short a stock the day after it announces an offering when it's going into the pricing that night. And Viacom, if you were shorting this thing, Joel, like you said, this was maybe one of the worst trades you didn't do. But if you buy puts or if you're shorting stocks, if you're so inclined to short stocks like I am, it was a gift yesterday because you knew the pricing was coming. You knew the stocks had an absolutely ridiculous run. And they're going to have they're going to have to probably do this offering significantly in the hole to get it done. And get it done at 85. The stock is actually trading below there at 84. Full disclosure, I do have the pair on. I have VIAC versus VIACA, so short one, long the other. So, and that's a day trade, so I'm going to work out of that. But from the markets, I'm basically market neutral on the two stocks. But I mean, this is just a gift yesterday. Investors just blindly buying because they have to buy the dip. And this is just a slam dunk for professional traders where, they come in. There's a lot of smart people out there. There's a lot of people out in a lot of different prop firms that trade these deals. And it's a nice play to short it on the night that, once the offering's been announced, to go short into the pricing because the pricing is often significantly lower, especially on a stock that's run this far.
And they also, if you're shorting it, you also can participate in the offering, right? To cover your position?
Well, they're trying to. I mean, you're going to get an allocation, you're going to get in there, but right now you'd be like, oh shit, I wish I didn't because you're getting it at 85 and the thing's at 84.13, so you're even in worse shape right now. A lot of times the offering prices can act like a floor. It is really bad news when they trade through them. Because then you have everybody who participated in the offering as a bag holder too. Because they're trying to they want to participate in the secondary because the thing's at 91. Okay, if I can get some 85, yeah.
There's no way. There's no way. If my broker called me up for an allocation on that, I'd say, $50.
But you know what? Most of the time they make money, Joel. Most of the time that they don't trade. Usually they do act like a floor to a certain extent. I mean, EYES is a good example of the opposite. So EYES came out and its pricing, we price this way in the hole too. You can say, what a horrible day for EYES, down 25%. You want to know where the offering got down on this?
$6.
$6. It's $8.22. So you got the 6 if you got the allocation. What are you doing? You're flipping it out right now. And even if you haven't got the stock, then you're going to short it into it. Knowing your 6 is going to cover you. So
I would have bought that at 6. I would have taken.
Yeah, well, so a lot of these do work out if you can get, if you have your broker and you got a good relationship with them, and they can get you some of this secondary action. There is some money to be made there, but in Viacom's case, you're getting down at 85 and you're looking at 84. That makes it tough. That makes you think it could puke more because there's now people who are going to be blocking the whole thing. It starts to get up to 85 and be like, please get me out. I don't want to lose on this. This is supposed to be free money. This is not free money right now. I'm already down $1.
Well,
so
also
those offering prices matter.
I think also you have, fundamental investors that, look at this and they're like, and I put this in my article, I made this my pre-market prep stock of the day. If the company thinks it's good time to be selling stock, who knows more about the company than the company itself? If they're unloading stuff, why would you want to buy? I mean, if you're going to buy someone's offer, you want someone a little bit more uninformed than the company itself. And they waited the whole time. They got the triple digits. I'm not even thinking about this as like a short, I don't know about today. I'll see how this plays out, but I would love to see it get back over 85, get a nice bounce, and maybe try and put a longer term short.
85 is going to be a wall of resistance now because all those secondary if it opens below 85 and stays down here, we're just in the pre-market right now, so it's early. But if it decides to open below 85 and trade some substantial volume below 85, all the people who did the secondary will be trying to get out at 85. So that's where, those numbers become so significant, where it can become a wall of resistance as well. Because right now the VIAC is 83.90. It's $1.10 below it, down 7. So one, you have all the bag holders who bought it yesterday thinking they were buying the dip, which who obviously don't listen to pre-market prep because we always warn you, don't buy, it's not investment advice, it's a trading strategy. But those who are buying offerings before the pricing, buying offering stocks before the pricing is out there are taking a major risk because they often price lower. So, anybody buying yesterday, not listening to the show. So sorry, you should be listening because we tell you how to trade this stuff. This offering stuff, I've traded this stuff for years.
Excellent.
And there's a lot of other prop firms, great ones that I've learned through as well. And talking to other prop traders, there's a lot of professional traders that trade around these offerings. And typically they price below because they got to get it done. I mean, you're trying to price this out. Stocks at 91, you're saying, oh, I'll buy 95. No. The secondary people aren't saying I'm buying 95. They want a discount. So that's why they price these things at a discount, because they want to get the offering price done. So they're trying to work it and they're trying to figure it out. Now, obviously, the price, they can't change the price now. But before it's announced, it's like, oh, no, I don't want it. I'm not paying $95 for the stock when it's trading 91. You got to get me done lower than that. So that's why, it's usually priced at a discount to get it done.
All right, S&Ps, we're kind of yo-yo here. 39.10, the pre-market highs 39.19. 4 a.m. I almost hustled out of bed at 4 a.m. because man, there's been some nice moves there, and you did get a nice rally in the SPOOs, but I was looking to short it, so I'm glad I didn't get up. But anyways, important area. We're hanging out just for look at this, 4 lows, like right around this area. We're not distancing ourselves from it. Had a good day early, good day on Monday. Couldn't get back up there on Tuesday. We'll see. What
rotation is keeping us up.
It does.
Amazon helping the Qs huge yesterday. Qs looked like, they had a bad day. But I tell you, Amazon, Apple was holding up to a certain extent, but you've got the mega caps, the value, and not that Amazon's a value name, but it is only trading like 4 times sales. You've got the mega caps that were keeping us up yesterday within tech. And then you had the rollover in value, something fierce yesterday in some of these names. General Motors, which I am long, ugly day for it. Value had an awful day. Oil had an awful day yesterday. Oil making a new low on the move. Oil looks like it's a breaking trend now. Like bring up, if you wanted to see, look at oil, bring up crude. It looks like it's breaking trend here, Joel.
It did. I did. I took my eye off it. The oil stocks weren't too bad yesterday.
They were pretty bad. They held up better than oil itself, but they still weren't that pretty. I mean, Chevron is now quietly $10 off, down 10% a week. So, if you're buying dips, I guess if you want value names, maybe some of these, but I hate oil, but there's probably some opportunities. And General Motors, I kind of like the GM dip here. I'm already long it. I don't know if I'm going to add to it. I'm like exposed 2 ways, long the stock and short puts. But, if I wasn't in General Motors and Ford, maybe the value trade, maybe everything just rolls over though. I'm a little bit spooked on the whole market, so I'm not really loading up. What do you think on the SPY? I mean, that's not the nicest looking chart either on SPY.
You can't see it. I mean, it doesn't reflect the. Let's go to the SPOOs because it encompasses that overnight activity. But let's just draw a line in here, and I don't do this in the spoos very often. I mean, this low from Friday, 39.75. It's been protected 3 times, 39.85 on Monday morning. I think you're finally, if we breach this, and we're hanging out in the lower 3900s longer and longer here, I think I'll stay. I mean, I'm not going to change my long-term portfolio, but you got a clear line in the scene here at 39.75, wherever it comes out on the spider. What was Friday's low in the spider? Because we did trade that during the session. I mean, you got to just keep an eye on that. When stocks are an index, when this goes up like it has, yeah, here's Friday's low right here. I mean, you don't have much underneath it. You really don't. And even for the month of March, your monthly low also – the rebalancing, Dennis, we have that coming next week too. And there's probably some jockeying for position, rebalancing, maybe some profit. That's what it kind of felt like when we rallied on Monday. There was like, okay, we're going up. Well, there's offers. What? We're going up. It's like chunk. So you kind of feel perhaps taking some profits on the winners and maybe trying to buy some stuff that's a little bit in the gutter. Get that performance up, get that quarterly bonus check up.
I'm somewhat concerned about the overall market. So that's why I've been saying, I've been concerned for the last month. So, it keeps bouncing back. I've raised a lot of cash just because I'm somewhat concerned that we topped out. I don't know nobody knows anything. I'm not as comfortable with a lot of these stock charts that I was, a month ago to be all in. So I think you still keep some cash just in case it gets ugly. We don't know what's going to happen, but I'm being cautious. I'm cautiously invested right now.
Always.
All right. Let's do some tickers from the chat. Do some ticker time here, 8:53. See, I told you we need a guest today. There's so much to talk about. Did not need a guest. Got a question about a Honeywell. Honeywell, if you'd call it they asked it, what is this? Is it a growth stock? Is it a value stock? What do you think? Just on a valuation basis, you could call it a growth stock. That's how it's priced. But I'll let Joel give you some levels to watch.
I don't think the valuation's crazy on Honeywell though. What's the trade?
But it's higher than the S&P, and that's kind of what I use as my. It's not nosebleed. We're not talking.
50 times sales. Yeah,
this isn't Zoom we're talking about, but it is higher than the average. Yeah, the average, just for everyone knows, the average the average price to earnings ratio of the S&P 500 historically is like 15, right? It's like somewhere in the 15 to 20.
But it's been running higher than that.
It's
We're up in the mid 20s, are we not?
It's higher. It's higher now. Historically, it's like 15 to 20. That's like a range you can use.
Where are we right now in the S&P? Anybody know?
Like 25, I think.
I think so too.
Somewhere around there. And then for price to sales, right? The average for the S&P historically is like somewhere around 2, right? That's like a nice number you can use as like a bogey, right? So in Honeywell,
not 50.
What?
With Zoom.
No. So in Honeywell's case, it's got a PE of like 27, so a little bit above the S&P, and it's got a price to sales of 4.5, right? So on those very basic valuation basis, and that's why we use ratios to compare A to B and B to C. Then based on those numbers, Honeywell has a higher valuation than, or is more expensive than the S&P 500. That makes it to me a growth stock per se, but this isn't by no means nosebleed, high flyer, Teladoc Zoom. When this is not in that category. This is
I see it more as a value, like cyclical value play, and the market sees it that way too because it's had a big run. I mean, but again, these stocks aren't cheap like you're saying either. You're making a good point.
Not cheap.
Nothing is cheap right now. That's the biggest problem. Is that the cheap value stocks like Viacom that were trading 5-6 times earnings are now like 20 times earnings. Yep. It's like all of a sudden everything got expensive. We came in a little bit on some of the growth names, but we explode on the value names, and it's like this whole market is just expensive. So does it stay expensive? Kathy Wood was making a good point. We give Kathy some heat, but she is smart and she makes some good points. I mean, interest rates are so low. Is it reasonable to say that the S&P should only be trading 15 times earnings when you can get a mortgage for 1.5% or 2%? I mean, is it reasonable to say when interest rates are this low, that the S&P shouldn't have a little bit higher multiple? It probably is reasonable to say that. So I agree with you, Kathy. We probably should be trading a little bit higher. But there's been a big run in a lot of value names. The value names aren't cheap like they were a month or two ago.
For your Intel traders out here, I got levels for you. I'm just gonna make it simple. It gets anywhere near 212. I don't think it's going to get to 212 soon. It goes to 28
for Honeywell. You said,
yeah, 212. It's coming down. Sellers are coming down, stepping down off that all-time high. Short term, I wouldn't want to be long this thing under 208. I do see some two other lows there, but 208 the low yesterday, another low at 208, going back 207.65, 207.87. Let's not split hairs. Let's call it 208.88. And if you don't want to hit the exit button there, then you better darn well keep your eye on these pair of monthly lows at 195. That's the absolute line in the sand for that. That's kind of like the 74 of the AMD, 195. So you're not going to get a substantial correction, but under 195, you had a monthly low that was higher than that, but the next monthly low after that is 168.11. So easy numbers. 195, 208, 212, Honeywell.
Do some more tickers as quick as we can, then we're going to hop off. Let's look at Lockheed Martin, LMT. We looked at that for a hot minute.
I'm long LMT. I put in the long-term portfolio back when the stock was 335. Took some heat, went down to 320. It's now 355. Try not to look at it. Love the dividend. Okay. Love the fact I think Lockheed Martin's going to be your major space player. I don't think space is a fad. I think space is the future. So it's still to be determined. It's up a little bit from where I bought it, but I just think going forward, Lockheed Martin, you talk about, space ETFs, Lockheed Martin not going to be a part of Kathy's space ETF. I think it'll be a big part of it, but that's not the reason. I just think space is everything. Yeah. I agree with Elon Musk to a certain extent. This is where we're going to be going. I mean, there's going to be exploration. There's going to be a lot of stuff going on. Lockheed Martin's going to be a big part of all of that. So I think LMT is just a major player. You want to buy space, Maxar. Well, Lockheed Martin's a cheap valuation way to play it all, and you get a 3% dividend.
And you got major resistance for now. Take out this. It's really a 360 seller, but he's taking anything he can hit in the 359 handle because you've had 3 out of your last 4 highs between 59 even and 59.43. So it's just an algo that's like, okay, I would love to sell at 260 or 360. I know I'm not going to be able to, but sell me 100,000, and if it gets above 59, and then the algos just go bum, 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 bum.
When Dennis said we're going to space, he meant pre-market prep. I am announcing right now that by the end of this decade, pre-market prep will broadcast live from space.
That would be cool. I don't know if I'm going to be on that broadcast, but I might remote come in. We'll send you up in the rocket ship, Spencer.
By the end of the decade, that's like years away.
First, I got to get out of my house, and then my neighborhood.
Okay,
and drive
There's
more
no COVID
in
space
yet.
Or at least yet.
Okay,
I'm flying in April, and I'm a little nervous about it. But anyways,
I want to wrap it up, guys. We got a big day today. We've got the Biotech Small Cap Conference. bzsmallcap.com. The link is also in the description of this video. Actually, you don't even have to do anything because
anything at all.
The stream is going to end and it'll redirect you automatically to one of the tracks. It's a 2-track event. It's on YouTube. It's free. Again, bzsmallcap.com is the link, but it's in the description of this video. And you don't even have to do anything because we're going to redirect automatically. So smash that like button, everyone. Today was a fun show. The chat was fired up. The chat was fired up. Dennis was fired up.
Great job,
guys. Was fired up.
Great job. No guests.
Great job. Everyone, that's a wrap for us. Smash the like button. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. I will see you at the Biotech Small Cap Conference, and I'll see Joel at 3:30.
Oh, we are doing it 3:30 today? Okay.
We are doing 3:30. I will see you for the At the Close show. Everyone have a good rest of your day. Good luck at the Open, and we'll see you at the Small Cap event.